Hey guys, good afternoon, everybody. Today is Monday, July 10th. It is 2 p.m. right now, our scheduled mentoring session for 2 o'clock. So I'm going to go ahead and set up this room real quick, and then we will get started shortly with our session for today. So it's a couple of things here to update. And we should be good to go. All right, good. Looks like we're good to go. Let me get this link sent out to you guys here in the premium. And we'll get started shortly. All right, I'll get a few moments for people to make their way in. And we'll get started shortly. All right, guys. Good afternoon, everybody. I'll get a few moments for people to continue making their way in. It is 2:03 right now p.m. Monday, July 10th. Our scheduled mentoring sessions for 2 p.m. So if you guys have any questions, feel free to put them in the chat, and we'll get started as soon as we get any questions in here. Hey, CJ, how's it going? Good afternoon. Hey, Maria. Let me just post this link up real quick. And we should be good. All right, solid. Hey, Dan, how's it going? All right, cool. So looks like ready to go. Just waiting for any questions here. Hey, Hussein, how's it going? Covington Tide. All right, cool. So if there's any questions that you guys have, feel free to pop into the chat. Drop any questions that you guys have, and we'll cover whatever you guys need me to review. We don't really have any questions for today, so the session will run for as long as we have questions. So let's get a few more moments for people to join in. But yeah, if you guys have any questions, just pop them into the chat, and then I'll go through them one by one as they come in. You guys did pretty good today. Looking back at everyone's profits, like Cameron over here saying his profits, he had all wins for today, made 4,039. CSUK here, 5,000 per usual. You expect CSUK to yield this much profit. Johnny here locked in about 690. He's won his first day trading on the top step. Matthew as well, locked in 271. I mean, everyone did pretty solid today. Even though we didn't really have any official trades, everyone is just following along to my analysis, especially with the momentum pullback scalp that everyone likes so much. Some people even took trades after with the 1 hour. I think Gian and Maddie took a couple trades, and they locked in some pretty good profit too. Let me see if I can find it here. I don't know if they posted it in the group. But yeah, let me see. Gion over here. So this is Gion's profits locked in 1,990. Took both of the 1 hour entries. You can see the timestamps. He took this one at 8 o'clock and this one at 9 o'clock. Both full TPs. So let's click Gion's profits. And then also Maddie's over here. So these are Maddie's profits. He just locked in another 100K account. So this is his third 100K account. Locked in 1,820. So he's got funded on that account right there too. So pretty solid. All right, so we have one question over here from Maria. So first question here from Maria is, in the momentum pullback strategy, do I have to wait for the pullback candle to close to enter? Yes, you do, Maria, because that's the only way you can confirm the pullback, right? If there's no confirmation of the close, then there's no confirmation of the pullback. So you have to wait for the pullback to actually close, but on the following candle, that's where you can enter at price. That's where you're supposed to enter. So you have to wait for the candle to actually close for the pullback. Otherwise, there's not going to be a pullback, because price can pull back and they can bounce right back into profit. But it's not necessarily a pullback unless there's been a confirmation of it actually closing. Like, for example, over here, price pushed up, there was a pullback right here. The candle has to close, because if it doesn't close down here, it's going to just continue to be green. Like, for example, over here, price pushed up and this candle did come down slightly, but it didn't close. So it just continued pushing up higher and higher and higher until there was an actual close right over here. Crystal, if you want to hop onto the Zoom, I know you have access to the Zoom. I see you're here on the YouTube, but you're the premium. So if you want to get on that, Crystal, just go to the any of the premium groups here and click on the Zoom. So I just want to make sure that you're aware of that, because you're on the YouTube. YouTube is delayed, so you're probably listening to me like 10 seconds later. So if you want to hop on the Zoom, it'll you'll have real-time access to the session. But I'll answer your questions too. So Maria, is there any other questions regarding that, or is there do you get it? Because I can show you an example, but only if you like need to see it. Because if you understand it already, then that's fine. All right, Maria said if it closes very close to the next price, should I avoid that trade, or can I place a limit order there? You probably won't be able to place a limit order because it'll be too close to price, Maria. So I would, if it closes exactly on the price point, like say for example, price pulls back and then it closes like right at the whole number, then you can enter right away if you want. If you want to enter a market order at that point, you can enter a market order. But if not, you won't really be able to place a limit order there because it'll be too close. Like if you're, say for example, like this candle here closed at 61, right? And you wanted to put your entry right there at 50, it probably won't let you place it because it's like literally on the spread. So I don't think it'll let you enter a trade there. You can enter market if you like, but I mean, you can try, but for the most part, I don't think it'll let you fill. It'll give you an error or something like that because it'll be like right on price because it still has to cover the spread. So, I mean, you can place the order there if you like, but again, it wouldn't make a difference because, for example, if price pushes up slightly and then it comes back down, it's going to fill your order regardless, right? So you have a couple different options. It doesn't make a difference because either way, your entry is still going to be at that same price point. So, say price pulls back, you place your limit order over there. You can do that if you like, if it lets you, and then if it fills it, great, it'll push up and go into profit. But for the most part, you're probably not going to have to do a market order if you want to enter like right there, because the well, right now the spread's not it's super wide because the market's closed, but typically the spread would be like 1 or 2 points, so 10-20 pips depending on where price is on open. All right, cool. Crystal's made it here. Does that make sense, Maria? I mean, you can do it. You can do the pending order if you want. It's just really up to you. It doesn't make a difference. Whatever type of order that you're putting in there doesn't make a difference. You're still supposed to enter at that price point, right? So we like using this example right here. Like when the candle closes right here, you can do whatever you like. If you want to get in right away, you can enter market. If you want to put a pending order, you can put a pending order. I'm just not sure if the pending order will actually sit. Okay, so Maria said my question was more related to enter in this price or the following. So you'd have to enter right here, Maria. Do you understand like how the strategy works? Because you're not supposed to enter down here. If you enter down here, that's way too far back. Your entry is always going to be right here. Does that make sense? The entry has to happen right here. So you're not going to enter at previous. That'd be way too far back. If you enter at previous, this probably would have hit your TP already. So you got to enter like right there. If it closes right there, or it closes on the price, you got to enter at that price point. If it closes below, then yeah, of course you got to go to the previous one because you can't enter right there. That's not the previous whole number. So wherever the number closes, like say for example, right here it closes right there, you have to enter at wherever the near like the previous price is. You wouldn't go to the next one because at that point, like look where price goes here. At this point, there's not even any opportunity to enter that, right? Price pulls back right here. Your entry happens right here. You're not going to enter right there. You're going to enter right here. So what you have to look for is just the previous, whatever is before that pullback. Okay. So I think that clears it up, right, Maria? If there's any other questions regarding that, let me know, but I mean, it's pretty self-explanatory. You have to go to like the previous one. Like if it closes right on the line, like say, for example, this closes, let me see if I can find an example here. Because that's kind of where it gets a little messy when it closes right on the line. But even if it closes at the line, it's the next previous one is still going to be the same one. It doesn't necessarily close on the line very often. It'll get close to it, but it'll cross below it. Like for example, right here, 90. Entry would be right here, entry would be down here. And since you get a sell signal right here, you wouldn't even enter, you would have canceled your order by then. All right, so let's get to Crystal's question. Crystal's question over here is repeat what, Chrissy? So sorry, I didn't really go over an example. I was kind of just showing you guys like, so for example, let me just show you, let me show you an actual example of an entry. So like, for example, today we took entries over here, right? Price is bearish. And this is going to go back to reiterate to Maria's question. So right here, the direction is bearish, right? Obviously price is coming down, trend meter is red, momentum's red, price is below the pivots. We're looking for a sell here. Maria was basically asking when the candle closes right here, but she was saying like, if the candle closes like close to this, the whole number, then would you enter at the next one or would you enter at this one? If it closes anywhere below or on the number, this is the entry point. If it closes anywhere above it, then your entry point would be up here. Does that make sense, Chrissy? So like, for example, right here, price is coming down. We have the retracement. Entry point would be right here. This is where entry point would be. Price breaks through, never happens. Again, right here, another opportunity. Price drops lower. Price still closes below this point. So entry point is still at the same level right there. So you can see right here, price fills it and it goes straight to profit target. Like it kind of hit it and then went straight down into profit already. Yeah, because you're just going for the next level. So for example, if you're looking for the level for entry, it's going to be whatever the previous whole number is right there. So I mean, either way, if you would have entered the trade here, let me just go back to it again, for example, here. So yeah, say for example, right there, price, you would have filled your order right there. It would have hit your TP, but if you still held on to it this morning, price still comes right back down. But say, for example, say you missed this one right here and you wanted to get in on this one. You can't really tell what candle this is, but if this was a green candle, then your entry would actually be up here. But I can't tell what candle it is because I don't know how it closed. But let me show you another example here. All right, again, right here, price pushes up from that area. Your entry point would be right here because this is the nearest whole number. You can see right here, price fills, go straight to TP, and that's pretty much it. And then you got to wait for the direction again. Another direction right there, wait for the retracement again. Price retraces up, entry point would be right there. Price drops lower. Once price drops lower from where it's currently at, you gotta wait for the retracement again. If there's no retracement here, price retraces right there, then your entry point's gonna be right there. But you got to confirm the direction. You need to know where momentum is. You need to make sure the pivots are, where the trend meter's at. Price drops again lower. Fills right there. Another full TP. So does that make sense, guys? It's pretty simple. I mean, if you look at enough examples here, it's pretty simple. You're just looking for the level above it. If you're looking for a sell here, you get a retracement. You're looking for the level right there. There's like 3 entries that came up. 1, 2, 3, etc. But it's pretty straightforward, pretty simple. It's not a very difficult strategy. If you guys want a detailed explanation, just go back and review the one-on-one session with Anelli. I can show you guys an example here too if you guys want to see it, but I mean, for the most part, I mean, I'm going to answer whatever question you guys have. If you guys want me to go over more examples, let me know. If not, then we can move on to whatever other questions you guys have. So next question over here from Crystal is she's asking, is the indicators more effective during New York session or London session? It doesn't really matter. It's effective either session. If you're trading an American asset, US asset, then of course you're going to want to trade during New York session, right? If you're trading a London asset like the DAX or whatever London asset that you want to trade, then you would trade in that session. It doesn't matter with the indicators. The indicators just identify momentum and trend, right? So it doesn't matter when you apply it. It depends on what you're trading. So it doesn't matter if you want to trade, US 30. If you're trading US 30, obviously you want to trade this during New York session. You're not going to trade this during London because it's going to be slower. If you want to trade London, you trade something like the DAX, right? I don't know if you're familiar with the DAX. DAX is basically US 30, but for Europe, the Euro 40 here. So I mean, it's US 30, but you're 40, basically same thing. But you can see here during US session, it's not moving smoothly, right? Because it's not a US asset. You go over here to London and it's moving smooth during London. See how it moves right here perfectly? Because this is London session. So, I mean, it just depends on what you want to trade. If you want to trade a London asset, if you want to trade London session, trade a London asset. If you want to trade New York session, trade a New York asset. Simple as that. You don't have to there's really nothing complicated to it. It's just you got to stick to like whatever's moving during that session. Like I'm not going to trade like US 30 at like 3 p.m. right? Or maybe I would if I'm taking the 1 hour entry, but I'm not going to trade it during Asia session because it's so slow. Like I do take trades during Asia sometimes, but they take like hours to hit. These trades are supposed to take like a few minutes because we're scalping, but they'll take like hours before they get to that point. So it doesn't really matter when you use indicators. It just depends on what asset you're trading. So stick to European assets during London, and then stick to US assets during New York session. So sometimes you'll see people trading GJ, right? Because they trade during London. That's a European asset. You'll see people trade GU during New York session because that's a US asset. So that's the difference. I mean, if you're trading Forex or if you're trading futures, each country has their own future. Like DAX 30 is here, UK 100. That's for UK assets. And it just depends. It depends on what you want to trade. But the indicator, it doesn't matter. It works for anything. It's all based off momentum. So it's based off the market data. It doesn't matter about the specific session. Yeah, no problem, Chrissy. Let's see. Chrissy's second question is, do we apply the indicator strategy to the 1 hour time frame, or is there other time frames the indicator is effective? So again, like same response. It doesn't matter. Like the indicators are based off momentum. So like, for example, it doesn't matter if you're on the 1 minute, you can still see direction there, right? It doesn't matter if you're on the 5 minute, you can see direction there. It doesn't matter if you're on the 10 minute, you can see direction there. It doesn't matter if you're on the 1 hour, you can see direction there. It doesn't matter if you're on the daily, it still works. It doesn't matter if you're on the monthly, if you're on the 12-month, the yearly, the indicators still work, right? You have momentum there. This is a 12-month chart. So it doesn't really matter. You can use it for any time frame, any asset. You just want to make sure that you're trading during that specific session's movement. Because obviously it's going to be moving super slow if you're trading something that isn't volatile. you're trading off momentum, so you want to trade something that's actually moving during that session. Yeah, no problem, Chrissy. If there's any other questions, just let me know. It might seem like a really simple question, but for you, it might be complicated. So if you want me to break it down further, or if there's any strategies that you want to see for a specific asset, or if you want to see if there's anything specific that you need help with, right? I'm here to like pretty much fill in the gaps. Like depending on which strategy you're applying, I can show you examples. If there's a specific asset that you want to trade, I can show you examples on there too. It just depends on like the specific questions. So yeah, guys, if there's any other questions, feel free to put your questions in the chat. I don't have any questions lined up, so we're going to go on with this session until the questions run out. So if there's no questions, we're going to cut this early. So if you guys have any questions, doesn't matter what question it is, put it in the chat, whether you're on the Zoom or the YouTube or wherever, just drop your questions. I just don't have anything lined up for today because I don't necessarily want to give you guys information that I don't need to give you, right? So whatever you guys need help with, let me know. But I'm not here to like just go on forever, because like if I do that, our sessions will go on for like hours. Like the last time we were on this mentoring session, I think I was on for like 3 hours because I just kept going on and on and on with each strategy. All right, so Christy wants me to explain the higher high and lower low indicator. So I think you're talking about the high low indicator, right? I'll go over here to a clean chart, Chrissy. Okay, so this is the high low indicator. What the high low indicator does is it marks up the previous high lows. So for example, here you can see how price goes up, that's a high, price comes down, that's a low, price goes up, that's a high, price comes down, it's a low, high, low, high, low, high, low, etc. So instead of having to draw your own high lows, which you can do yourself, this indicator does it for you. It'll tell you whether it's a higher high, whether it's a higher low. HH means higher high, HL means higher low, LH means lower high, and LL means lower low. So, I mean, that's what the indicator does. You can use it however you like to see. So for example, if you're looking for direction of trend, you can use this indicator. And this indicator will show you where the higher highs are, right? So like, for example, if you have a higher high, higher low, and then you have a lower high, lower low, and then it goes back to the lower high. This helps you identify the direction of price, right? If you're looking at this from here, it pretty much tells you that price is likely to keep going lower, right? So you have that marked up, and then obviously price goes lower. That's what high lows represent. So it's just, I mean, it just depends on like what you're using it for. There's different ways of using it. You can use the high low indicator to identify ranges. Like for example, right here, we marked up the high lows and you can see that price is ranging, right? So if you see price ranging like that, obviously you're probably not going to take any trades until the price breaks below it. So for example, right here, you can mark up the higher high and the lower low, or the lower high, or whatever it may be. And so like, for example, if you like to trade like break and retest, this would be what you'd be using it for. So if you're looking for breaking, like some people like to trade support and resistance, right? If you like to trade support and resistance, that's what this indicator would be used for. If you're identifying basically sideways movement over your support and resistance, and then once price breaks and close below it, some people like to catch a break and retest. So like price breaks and close below it, retest right there. If that's the case, some people like to take sells at that point. I mean, it just depends on how you trade. There's no one way to apply it. This indicator is used for however you want to use it, right? I mean, I don't trade that way, so that's not something that I would be trading. I trade based off momentum. But if you want to trade support and resistance, that's how you would use it. Because you would just mark up. What I would typically use, or what I would mark up, is I typically focus on like the higher highs and lower lows. Because the high lows and lower highs don't really they're not really strong, right? Like, for example, if you had something like this marked up, this is a lot stronger if you have a higher high and whatever the closest lower low is right here. Because if you just draw those up, then, you know, this will identify where the range is at. So if you're able to identify where this range is at, you'll know when to take that break and retest if that's what you're looking for. So, I mean, it kind of just depends on like which one to apply it for. There's not like one way of applying it. It just depends on how you want to do it. Chrissy said, would you enter a trade solely based on the high-low strategy? So which high-low strategy are you talking about, Chrissy? There's a lot. There's high-low scalp, there's high-low momentum. I'm not sure which one you're referring to. If you have a specific one, I mean, every strategy is meant to be traded solely based on that strategy. So, I mean, short answer to your question is yes, you would apply it. But I mean, I don't know which one you're talking about. Yeah, I mean, high-low scalp, like, so every strategy is its own strategy, Chrissy. There's no maybes. Like, there's not, oh, I'm not just going to take it off this. It's based off that specific strategy, right? So, for example, if you're applying the high-low scalp, like you mentioned, so I mean, let's see if we can find an example here. The thing is, like, I can't show you what the example would look like because I don't know what the bias was. This is something that you have to identify, and then you would tell me, like during these mentoring sessions, like you would look for a high-low scalp, and then you'd say, "Hey, Sean, I took this trade. The trade didn't work out. Can you review it?" Right? Because I don't know what the bias was. So first step right here is to confirm the bias. Like, I can't go back in time and confirm the bias because we can't go back in time and see what retail sentiment was. Fundamental bias, technical. We can check technical bias, but we can't check fundamentals and we can't check retail sentiment. So it's impossible for me to check what the overall bias is unless like we know what it was. But this morning, I don't think there was a bias. But I mean, for example, if you're looking for, I'll find an example of that strategy. I mean, the strategy is straightforward. That like all strategies are meant to be applied how they're taught, right? Like you're not supposed to tie two strategies together. Each strategy is its own strategy. So yeah, you would apply the high-low scalp on its own. You could apply the high-low momentum scalp on its own. You can apply the intraday scalp on its own. There's like 40, I think 40 strategies now. So there's a lot of strategies, but you don't have to, like, they're all by themselves. You don't have to link them with another strategy. They're all supposed to be taken on their own. So let me see if I can find yeah, an example, but it's kind of hard for me to find an example here because the market's not, like, we don't have a confirmation of, okay, so this is probably one example right here. So I can't remember what the bias was this morning. I don't think we really had much of a bias, but here's like one example of it. So actually, there's a better example down here. So I'll go over that strategy right here just to do a refresher. I know you haven't been around for a while, so this is all kind of probably new to you. But basically, first you want to confirm the overall bias. We're just going to assume that it's bullish here. I can't say whether it was bullish or not because I can't remember what it was this morning. I know price was kind of bouncing around and it wasn't really much of a bias, but I do remember that retail sentiment was starting to increase on the sell side. So if that's the case, then we were probably looking for bias at this time at 8:23 or whatever time this was. So basically, confirm overall bias. We're going to assume that it was bullish. I'm going to go over here and mark up the high. So there's a high right there, right? Second, you want to confirm the previous high-low using the high-low indicator. So right here, this is the previous high-low. Because you're looking for a buy here, so you're looking for the previous high. You want to make sure that 5 candles pass to establish it. So like this was the high here. 1, 2, 3, 4, 5, 6, 7, 8. 8 candles have passed it. It confirms it as a high. Next, you want to confirm price break and close past that previous high-low. So right here, you can see this candle broke and closed past it. So we'll go back to step one. Step one, confirm overall bias. We're assuming that it was bullish this morning. Second, you want to confirm the previous high-low right there. Third, you want to confirm price break and close past the previous high-low, which should be right here. Fourth, you want to confirm that you're trading in the direction of momentum. You have a buy signal right here, so that's the direction of momentum. And for step 5, you want to make sure that price is not ranging or consolidating. Right here, it's kind of tough because price was ranging here for a bit, so I don't know if this is one I would personally take. I'd probably wait for the next level up here. But I mean, if you really wanted to take it, you could have taken the entry right here. You enter on the close of the candle. So that's where your entry would be. You have your setup right there, you let the trade run, go straight to full TP on the next candle. So that's an example of an entry there. But again, it's hard for me to confirm this because I don't know what the bias was. I think there's another example right here. Same thing again, like we'll look for the same thing here again. So again, right here, you have another high low, right? This high low hasn't been tested yet. First, step one, confirm overall bias. We're assuming it was bullish because we assume this one down here is bullish. Second, you want to confirm the previous high low. Previous high lows right there. 5 candles have passed since then. So there's a high right here. It's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 20, whatever, 20, over 20 candles, right? So 20 candles have passed and this high has not been tested. So that's way past the 5 candle minimum. Third, you want to confirm that price breaks and closes past that high low. Same example right here, right? This candle broke and closed past it. Again, this candle right here broke and closed past it. And for number 4, you want to confirm you're trading the direction of momentum. There is still a green buy signal right here. There's no signals in between. And once you confirm that, you do the same thing. You enter this for a long position. You go for 100 pips, let the trade run, retraces back a little bit, comes back up eventually, and it blasts right through a TP. So the strategy is pretty simple. You can apply it on its own, Chrissy, but I think the biggest thing that you have to confirm is the overall bias. So you'd have to do that when the market's real time. If you don't know how to confirm retail bias, let me know. I can show you. But basically, you want to look at retail sentiment. So what you'll do is you'll pull up retail sentiment over here. You want to make sure that sentiment is either 60% short or 60% long. This is how you identify retail bias. Yeah, so you go to the website. Website's on this website is on the course. So if you go to the course, this is like set out there. You click on it, and then you want to see where sentiment's sitting. So for example, here, if it's 61% short, this indicates that 61% of retail traders are selling. So you typically want to do the opposite of everybody else. If everybody's selling, you typically want to buy because majority of people lose at trading, right? So you want to do the opposite of everybody. You don't want to lose like them. So you want to do the opposite. If everyone's selling here, then you want to look to buy. So that goes hand in hand with our example right here. This example over here, we're looking for buys. This retail sentiment would indicate that we should look for buys because there's more sellers on the sell side. Typically, you want it to be about 60 to 65% or more in one direction. Sometimes it's not going to be there. Like this morning, I think it was at like 53%, and then it went up to like 58%, and then it just sat around that area. So I mean, you're basically just looking to do the opposite of everybody else. If everybody's looking to take sells, you want to look for the opposite and look for buys. And usually it works out for the most part. But again, that's just one step, right, Chrissy? So you have one step right there for retail sentiment. For fundamental bias, you want to pull up CNBC, and then this will tell you. So like, for example, if this is 61% short and the fundamentals here are 200 points in the green, you typically want it to be above 100 points. If you got these lining up where this is bullish and this is telling you to take buys, and your trend here is also bullish, trend here is green, then in that case, yeah, for sure you should be looking for buys here because the overall bias is bullish. So it's pretty simple. Like once you get it all down, but it's just going to take practice and repetition. Once you do it a couple of times, it'll make sense. It's not really that difficult. It's just matching numbers, colors, direction, and that's pretty much it. So yeah, if there's anything else that you want me to cover, Chris, let me scroll up. So I think you might have had another question. Okay. Okay, gotcha. Yeah. So, going back to so this is what's good about these mentoring sessions. Like Chrissy asked one question about the high-low scalp. I showed her an example. And then from this example, I was able to break it down and go deeper and deeper and deeper into the question, even though she didn't have those questions, right? She didn't have the questions initially, but I was able to kind of read her mind and I can see what she was maybe thinking about. So yeah, if you guys have any questions, just put them down and then I can probably dig deeper and deeper to that question. And I can go over examples like I did here. But yeah, Chrissy, a short answer to your question is yes, you can apply this on its own. Obviously, if you want to apply them, I think what you're thinking about is you're thinking about the triple confluence because the triple confluence requires multiple strategies. That's why it's called a triple confluence because it's 3 strategies in one. So for this one, this is technically a high-low scalp, and it's also lined up with the trend meter, which is an intraday scalp, and then it's also incorporated with the pivots, which is a pivot scalp. So I think that's where you might have been a little confused, but yeah, you can apply this on your own, on its own. It's not going to be as accurate as it would be if you had, the triple confluence, because this strategy almost always hits. It doesn't come up very often, but it almost always hits. Yeah, no problem, Chris. I'm glad I could help you with that. If there's any other question regarding that, let me know. Otherwise, we will move on to the next questions here. All right, let's see. Soothing Meditation is asking which pair is best to trade with MFF because it moves slower than FTMO. It doesn't move slower than FTMO, Soothing. I'm not sure where you saw that, but they all move the same. So they don't move slower or faster. They're all following the same asset. There's no best pair. Your best pair would be what you're good at trading. So it just depends on what you want to trade. If you're good at your USD, then trade your USD. If you're good at GJ, trade GJ. But it doesn't move any slower or any faster. It moves the same speed. There's no difference between them. The only difference with MFF is that their execution times are worse. So they don't move any slower. It's just their execution times are a lot worse because you'll enter a trade on FTMO. Well, like for example, for me here. So let me show you my profits from today, right? So it wasn't that bad today, but it's been worse. So for example, you can see my FTMO over here. I locked in 2,120. And you can see my MFF over here. I locked in 1,060. This is actually fine. This wasn't executed. It was executed maybe a little off, but not so much. This one over here, the second trade, was executed very off though. So you can see over here, I locked in 1,440 on my FTMO, and my MFF over here locked in 420. So this should have been half of this profit. So if you did the math, 1440 divided by 2, I should have made 1720 off this trade. I only made 420. So that's like a clear example of the execution times being super late. I don't know if it's their execution times or their spreads. It could be both. It could be spread, it can be execution times, or it can be both, a combination of both. It just depends on what you on what you want to trade it with. Because it's just going to depend. Like, I'm not sure what it would be for your USD or GJ, like you mentioned. I don't trade those pairs, so I can't really give you an answer to that. But for US 30, it's definitely off. It's not slower, it's just their execution times are different. Another question from Soothing is asking if these strategies work on every pair. They can. I haven't tested them on every pair, but they should. As long as the pair is volatile and it's not just choppy, then it should work, because these strategies are based off momentum. So like you said, your USD, if that's something that you like to trade, yeah, the strategies work here fine. You can see here the same strategy that we went over with Chrissy right now. The only difference is going to be your TP stop loss. TP stop loss is going to be different. So for example, right here, same strategy, the high-low scalp, right? We had a bullish direction right here. You had this candle breaking, and I'll put the criteria up here. So I can't tell you what the overall bias is, because again, this is later in the session, so I can't necessarily tell you what the bias was. But we'll just assume it's bullish. You can kind of predict that it's bullish here because price is above the pivots, trend is green. You can see prices going up. So we can assume that it was bullish here. Confirm overall bias, bullish, confirm the previous high low right there. Confirm price break and close past the previous high low right there. Confirm price is not ranging or consolidating. Price is not ranging here. You have a bullish momentum here, and you take a trade. So the only difference here is your TP stop loss. I don't trade your USD, so I can't necessarily tell you what it should be. I'm assuming it'd be like 5 pips, because I don't know. I'm assuming if you scalp, that's how much it would be, right? You let the trade run, and it just goes sideways forever. So this is why I don't trade Forex, because look what Forex does. I used to trade Forex, but I don't trade anymore. Equivalent to what it would take me to take a trade on US 30, I'd be out of this trade within 2 minutes. You're gonna be holding on to this trade for 2 hours, basically, and it still wouldn't hit your TP. Right? So that's why I don't really trade Forex anymore. Forex is just too slow. I mean, I'm good at trading Forex too, just not for scalping. If you're gonna trade Forex, you're gonna have to trade swing or intraday because it's impossible to scalp. I mean, it's not impossible. I've scalped with Forex before, but if your spread is like 3 pips, you know, you're going for 5 pips, you got to go for 8 pips at that point. So, I mean, Forex is fine, but you can see here that the strategy does work. It's just you would change your TP stop loss. You wouldn't go for 100 pips because 100 pips on Euro USD is way different than it is for US 30. All right, Susan. So if there's any other questions you have regarding that, let me know. But I mean, yeah, you can apply this on whatever you'd like. So like here, let me show you an example. So I wouldn't trade on the 1 minute Forex. If you're trading US 30 or Euro USD, I would trade on maybe like the 15 minute. Right. So I trade on the 15 minute, like say, for example, I don't know if there's any entries here. Here, I'll just show you the entries. So this is another strategy, the intraday scalp. This is just easier because it's just easier to see. So right here, you can see we have a buy signal. It matches the trend here down below. This is considered an intraday scalping tree. Typically, what I'll do is I'll just zoom out from here into my TP stop loss right there. So you can see right here that it just automatically calculates it, and it's going for 20 pips. Let the trade run, and obviously it works out in place. So a lot of these, if you look at the older strategies, like this is an older strategy. This was actually created for Forex. So I created this strategy before I started trading US 30. This is the intraday scalp. This is meant for Forex. On the 15 minute, it doesn't have to be the 15 minute. You can trade on whatever time frame. If you want to trade on the 1 hour, I mean, it's the same thing. You're just matching the momentum with the trend meter. So like right here, buy signal, trend meter is green, zoom out, enter long position right there. You can see automatically it sets it for you 35 pips, let the trade run, and it hits TP eventually. I mean, it takes longer, but it hits it eventually. So yeah, I mean, if you want to apply this for Forex pairs, you would just go on you just look at the older strategies. Like there's specific, if you go on the course, let me see if I have it up here. You just go back to the older strategies. So you just don't look at like the scalping strategies, they would work, but you have to test them because they're specific to scalping. Like if you do the original intraday strategy, this was for Forex. Momentum pullback, this is for Forex. Pivot scalp, this is for Forex. You can do scalp, intraday, swing. I mean, there's a ton of strategies here. Like I've been trading live with you guys for, I don't know, what, like 7 years now. So like every strategy that I've come up with, it's in this course. So if you want to go back like farther back, you can do that. They don't necessarily say Forex, but you can just test them and see if they work. And I'm pretty sure they would work as long as it's directional. All right, so that's it with that question there. Let me scroll up real quick and see what else we have here. What's up, Maddie? Saw you joined in. All right, so let me scroll over here real quick and make sure that I'm not missing anything. All right, Johnny's asking if I can give an example of the 1 hour strategy. Sure, let's do it. All right, so let me see if there's any entries here, because the thing is, there wasn't really any entries here for today. I mean, there was 1 hour entries, but they weren't like necessarily good entries because right here, I'll show you what I took last night. So let me just show you the same trade I took over here. Yeah, no problem, Susie. Glad I could help you with that. So I took this last night at 8 p.m. This is the entry that I took right here. Let me just go back to 8 p.m. So I think 8 p.m. is like, I don't know, military time. I think it's 20. Could be wrong, but let's go back to 20. All right, so, man, I really suck with military. I think it's 20. If anybody could correct me, Okay, yeah, thanks, Johnny. That's what I thought it was. All right, so the entry I took was right here. So let me just put the criteria for the I thought I made a thing for it, but I guess I didn't. 1 hour. And I got so many strategies here. I keep saying I'm gonna come and clean this up, but I never do it. It's just so much work to have so many strategies on here. All right, let's just I'll just create it for you guys right now. So this is gonna be the YM US 30 1 hour strategy. So first confirm momentum on 1 hour time frame. To confirm momentum on a 1 minute time frame matches 1 hour. Third, confirm 1 hour trend meter matches momentum. And I think that's it. Enter on open of following 1 hour candle. So here's the thing, TP stop loss, this isn't going to be the set TP stop loss, but this is what it is for now, because I just haven't tested it enough to figure out. And the thing is the market's going to change. So like right now, the volatility is very low. So it's going to change like once we go into fall, when we go into winter. Strategy is going to be the same, but the only difference is I mean, I don't know, we'll see. But the only difference is that we're going to adjust this. Like right now, it's super wide because the spread's wide. And then also like the volatility is super low. So like it's not going to always hit your TP right away. Sometimes it hits your TP right away. Sometimes it's going to retrace back and go into drawdown, but eventually it'll hit your TP. So I think that's pretty much it. Let me save this real quick. Yeah, I mean, so that's pretty much it. Like, so the next candle right here is going to be the next hour candle. So basically right here, first confirm momentum on the 1 hour time frame, go over to the 1 hour. You can see the momentum here is bearish, right? There's no green buy signal anywhere in between. So with that said, we have a sell signal here on the 1 hour. You go down to the 1 minute. You want to confirm that the 1 minute momentum matches the 1 hour. So we got a sell signal on the 1 hour. We got a sell signal here on the 1 minute. Third, you want to confirm the 1 hour trend meter matches momentum on both the 1 hour and 1 minute. So we got a sell signal for both the 1 hour and 1 minute. The trend meter down here is going to be set to the hourly. So if you don't know how to do that, just go to your settings, set everything to 1 hour, close it. You're basically looking for colors. If you're looking for red, then you're good. You got red on the 1 hour, you got red on the 1 minute, you got red on the trend meter, you got all that set up. As soon as this next candle opens, you're going to set your TP stop loss up for 1040, right? 100, 400. You know, this doesn't look good, but the win rate's so high that it doesn't really matter. Because the thing is, there's maybe like, I don't know, like 24 wins. There's maybe like 23 wins in a day and maybe 1 loss. So, you know, go figure, you do the math, you can eat that loss because your next trades are going to be a win. So with that said, we have this set up right here. That's how the strategies trade run right there. Goes into drawdown right here. That's why you need a wide stop loss and eventually go straight to TP. This is literally the trade I took last night. So you can see over here, I took a screenshot. That's the same exact trade. And there's my profits right there to show you guys the transparency. Like I actually took the trade. I'm not just here telling you guys the strategy. I'm actually taking the trade from the strategy that I mentioned. So this is a strategy that Johnny was asking for, the 1 hour strategy. You can basically take it every hour. So that's pretty much what it was at 8 o'clock. And then this is So right here is 9 o'clock. You can see that there's a buy signal here. So this doesn't line up. You can't take a trade there. There's no entry. 22. All right, so here's another one right here. So let's go to 22. This is at 10 p.m. I probably wouldn't trade it at 10 p.m. Like 10 p.m. is usually a weird hour for me, so I don't like trading around that time. But I just want to show you guys another example. So we have a sell signal right here on the 1 minute. We have a sell signal right here on the 1 hour. You got a red trade meter down here. It's the same thing. Enter again right there. Got it set up 1040. Let the trade run. Full TP. So, I mean, pretty much if it lines up for the hour, you can just take it. And it's like one of those set and forget strategies. Just take it, step away, come back, and hopefully hit your TP, which you usually would. But I mean, that's pretty much it. Pretty simple. Nice. So Johnny said that he actually took this one that I just drew up. And yeah, it played out perfect, Johnny. I mean, it took some time to hit. Usually this hits right away, but that's an example of how it's applied. Super simple. So yeah, Johnny, if there's any other questions regarding the strategy, let me know. Otherwise, we will move on to the next question. Yeah, exactly. Asia session is slow. So like Johnny said, Asia session is hella slow. Appreciate the touch up. Yeah. No, Asia session is slow, but it does hit. I mean, you might be holding on to that position for like an hour or 2 hours, but a lot of times it does hit. Just be careful. Like don't be too like I wouldn't be too trustworthy of the strategy, because the problem when you trade during Asia is that sometimes there's stuff going on in the world that'll cause price to kind of go the other way. So I wouldn't necessarily put too much faith in the strategy just yet. Test it out a bit. Don't go too heavy on lot sizes. But once you're comfortable, then you can increase your lot size. But initially, all these strategies, you should at least test them out and get comfortable with them before you actually, really go full in. Because the thing is, you want to understand how the strategy works, and you have to be, you want to be confident with taking the trade. You don't want to take the trade and then trip out when it goes into drawdown, right? So for example, over here, you don't want to take this trade, and then as soon as you take the trade, it goes into drawdown. You're like, crap. This strategy sucks. It doesn't work. I need to pull out for a loss. And then you pull out for a loss up here. And then in like 2 minutes later, it goes right down to profit and hit your GP. So just make sure that you understand that these strategies take time, especially if you're trading during Asia. Because this right here went to drawdown a bit, but eventually came right back down. It took a long time though. So right here, entry happened at this point. It didn't come back into profit until like maybe 20 minutes later, and then didn't hit profit target until like 22 minutes later. So just make sure that you guys keep that in mind. These strategies have been tested decently, but they're not like fully tested yet. I just came up with this stuff, I don't know, last month. I mean, I've applied these strategies before, but I haven't tested them enough for US 30. Like I've tested this for other stuff, like for like Forex and stuff like that, and it works, but not necessarily for US 30. US 30, this is still new. So, all right, Johnny, if there's any other questions for this regarding, the strategy, let me know. Otherwise, I will move on to the next question here. All right, let me scroll up real quick. All right, question from Martha. Martha's asking, join late. My apologies if this is repetitive. On the momentum pullback, do we wait for price to hit the whole number to enter? Because we're looking for bounces from the algo numbers. That is correct, Martha. So like for the momentum pullback scalps, you're looking for price to pull. So you don't necessarily want price to pull back to that number, but you're looking for a pullback, and then you're waiting for price to go to that number for your entry. So let me just show you an example over here. So we have a bullish confirmation right here, right? Price is above the pivots. We got a retracement right here. Your entry for this would be down here. So you already have a pullback. This is a pullback that you're looking for. Once you have that, then you just have your trade ready to fill. So right there, the trade didn't fill, right? At this point, price pushed up further, and now your opportunity is a little bit closer. It's now at 90. So right here, you have the retracement. So this is a retracement pullback that you're looking for. And now once you have that, then you're looking for price to come back down and fill your order. So right there, you can see how price came down really quickly, filled your order, and then straight to TP. So you're not really looking for it to, I mean, you're waiting for the pullback and then you're looking for the retracement. And then you're just, once you have the retracement, then you're having your pending order just waiting there, or you can enter it manually. That's how you would be looking for the bounce, because you're just looking for the bounce. That's literally what you're looking for. So if I go back one candle, you can see how the retracement there. What you're looking for is just a quick bounce. You're looking for price to bounce down, hit the algo price, and then go back up into profit. And that's literally it. So we're basically identifying where these algorithms are trading, these bank algos, because they usually trade at whole numbers. And using my indicators here, we can kind of identify where those whole numbers are going to be hit. Because the thing is, like, there's a lot of whole numbers here, right? You can put a whole number all over the screen. If you want to mark up every single whole number, the thing is, you need my indicator to identify where the direction is and where momentum is going. Because you can trade in either direction if you like, but identifying where the key entry points are is going to be what really matters. Yeah, no problem, Arthur. All right. PC is asking for the hourly strategy. How do you determine the direction of momentum? Yeah, it's based off the momentum indicator, PC. So you're just using a momentum indicator for this. So like, for example, here, this entry that we looked at, you're looking at momentum here on the 1 hour, right there. You're just looking at where momentum is going, and then same with the 1 minute. Pretty simple. You just want to make sure it matches the 1 hour and the 1 minute. I mean, it doesn't necessarily have to match. You just have to see that there's both a sell signal on both time frames. That's pretty much it. And then the trend meter as well. The trend meter is set to 1 hour. So you're basically just looking for all red. So for example, you're looking for all red here, red, 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 go to the 1 hour, red momentum. At that point, price is probably going to hit that TP. It might take some time, but it's going to hit the TP. So that's an example of a sell. Let me see if I can find an example of a buy. All right, so just go over here. It's like a London session, I think. All right, so we got the same thing here, right? This was on June 30th. So June 30th right here, you have a buy signal. You go to the 1 minute, you have a buy signal right there. You have the green trend meter. This is the 59-minute candle. The 1 hour candle happens right here. You enter right there. You do the same thing, 1040, let the trade run, pulls back a little bit, shoots up. So you can see it kind of goes sideways for a bit, but eventually it pushes up and it goes right straight to TP. So right there, full TP. That's the 1 o'clock. We'll go over here to the 2 o'clock. All right, same thing again right here. This is the 59 candle. Go to the 1 hour, buy signal, 1 minute, buy signal, trend meter green. Got that set up right there. Same thing, rinse and repeat. Got the same setup there. Go sideways for a bit, full TP. Back to back full TPs right there. You go over to the 3 o'clock candle. Same thing again here. All right, so actually there's no entry on this one. So for this one right here, there's no entry. Reason for that's because there's a sell signal. There's no buy signal here, no entry for the 3 o'clock. I mean, it eventually pushes through, but you still wouldn't have taken it. Okay, again, right here, 4 o'clock. Let's see. Again, there's a sell signal there, no buy signal, no entry. 5 o'clock. You guys can see this. It's a very simple strategy. It's not very difficult at all. You just have to be able to follow directions. I mean, that's really what it is. So Maddie's been applying this strategy. He's passed like, I think 4 FTMO counts, 3 or 4 FTMO counts within like a 2-week period. All he did was apply this strategy. That's pretty much it. Like literally just this. Again, right here, buy signal, green trend meter, buy signal right there on the 1 hour. Same. There's certain times where I kind of have an idea where not to take the trade. Usually 6 a.m. is not a good time to trade it because it's right into market open. So I wouldn't take that one. But again, right here, full TP. So right there, you can see all the entries back to back to back, all full TPs. Super simple. Let's see, Kaner's asking, so does the trend meter on both the 1 hour and 1 minute need to be set? You just set it to 1. Kaner, you don't have to change it. It's set to 1 hour at all times. So you set the settings right here to 1 hour. It doesn't change. If you go to the 1 minute, this is the 1 hour trend meter. If you go to the 1 hour, this is the 1 hour trend meter. Doesn't change at all. Whatever you set this to, it's going to stay at that one at that time. So if you want it to 1 hour, just set it to 1 hour, and it's just always going to be set to 1 hour trend meter. So yeah, just set it to 60 minutes each or 1 hour, whatever you set it to, and then it'll stay. Yeah, no problem, Kenner. Let's see what else we got here. All right, so if there's any other questions regarding the strategy, guys, let me know. Otherwise, let me scroll up and see. I think there's one more question left. CJ said, I've only been matching 1 hour trend with the 1 minute momentum, but it still hits. Yeah, no, I mean, that's the original way of applying it, CJ. But for me personally, I like high quality trades. So I use the 1 hour. Initially, before, it wasn't even the 1 minute. We didn't use the 1 minute at all. It was just the 1 hour trend and the 1 hour momentum. And then Maddie and Gian started helping with it. And then they started going on the 1 minute. And for me, I use both now. I use the 1 minute and the 1 hour because I want to know for sure it's going to hit. So this is just the way that I apply it. I mean, if you guys want to apply it the other way, like you've been doing, CJ, you can do it that way too. It doesn't matter. Like, for example, today, there was no 1 hour momentum, but Gian and Maddie took it just off the 1 minute. Like, for example, over here, right? Like the trend and stuff didn't match up today, but Gian and Maddie still took the trades. And they still hit. Like, for example, I think, all right, so like, I think they took the trade here at 9 o'clock. They took the 9 o'clock trade, go on the 1 hour. There's no sell signal there, right? So if you're applying the way that I do it, I wouldn't have taken these trades. That's why I didn't take them. But Gian and Maddie still took them, and they still hit full TPs. So I mean, it's up to preference. You know, it doesn't matter how you want to do it, but I like quality. Like, I don't like losing trades. I don't like the thought of maybe even losing a trade. So for me, I go for as many confluences as I can find for that specific entry. I mean, I didn't really update. I've been doing this since like from the beginning. It's just you guys never had the explanation because I never explained it to you. This is the first time he's explaining the strategy to you guys. So you guys didn't really know what the strategy was until today. Unless you watched the one with Madhu, because if you watched the one-on-one session with Madhu, I taught him this way. So if you guys watched, there's only been 2 times where I've explained the strategy. It's been today and with Madhu. I've given you guys hints during live sessions, but I've never actually told you guys how to apply the strategy. So yeah, I never really updated. I've always applied it this way. There's just different ways of applying it. So like some people go off just the 1 hour, some people just go off the 1 minute. I go off both. So yeah, I've always been doing this because like I always try to go for like the highest quality trades because I don't want to like take a trade, set and forget it, and then have to think in the back of my mind like, oh, I should have just skipped that trade because I didn't have the 1 hour momentum, right? I want to know for sure. Like if I got the 1 hour momentum and I got the 1 minute, odds of it going at least 100 pips are very likely. So Johnny's asking, what hours would I take? Would I stay away, or would I? So I don't have a specific time that I take the trades. I just take them whenever I feel like taking them. If they look good, then I'll take a trade. The times that I usually avoid would be 6 a.m. because that's when market opens, and then probably 11 a.m. and 12 p.m. because that's when market closes. So basically, whenever market swaps or opens and closes, that's usually where I would avoid it because at that time market starts to move kind of weird. It starts to reverse, right? It just moves all over the place. So it's not really a smooth move. So there's not a specific time where I take the trades, but there's specific times where I don't take the trades. That's usually what I do. All right. So other than that, let me scroll up real quick. See if I'm missing anything else. So let's see. Lila's asking, can we practice how you trade? Sometimes it's fast and I catch it by luck, but didn't want to trade using luck. So, I mean, have you been on the live sessions, Lila? Because I trade literally live. Like I trade on TradingView now. So if you watch the previous live sessions for like the past week, everything's done on the screen now. So if you want to go back and look, I mean, I can't show you now because the market's closed. It's impossible for me to show you how to trade, how to enter a trade right now. I mean, if you like, literally, I just hit buy or sell right here. But I'm using. I think you've asked this question before. I can't show you MT4. So if you want me to show you how I execute trades on MT4, I can't do that because I can't drag it onto here. But I do trade directly on TradingView now. So I use Top Step. So, oh gosh, okay, Lila. Yeah, no, for sure. Yeah, it just depends on like what strategy I'm applying. But if you're at a live session, I'm typically applying the momentum pullback scalp. So like when price pulls back, that's usually where I'll enter the trade. And then I usually hit like buy or sell right here. I mean, I don't have it on here right now, but because the market's closed, but yeah, generally have a buy and sell button. Spread's too wide though, so I wouldn't trade right now. But yeah, for example, if I want to enter a buy here, I would hit buy, have my contract size set up, have my TP stop loss already here set up, and I just enter the trade. All right. So, all right, guys, I think that's it. If there's any questions that I missed, just drop your question back in the chat. I think I've covered everything. Let me scroll up real quick. Make sure I didn't miss anything. Yeah, other than that, I think that is about it. Sorry, guys, we were on this session for about an hour. If there's any other questions that you guys have, feel free to let me know. My goal here is to help you guys out. I'm profitable already, so I don't really need help myself, but I'm here to help you guys out. If there's anything that you guys need help with or have any questions about or anything that you're concerned about, just let me know. For these two strategies that we're applying, the momentum pullback scalp and the 1 hour strategy, this is still fairly new, so don't worry if you guys don't get it yet. I mean, I'm still making adjustments to them, but I mean, for the most part, they work really well how they're applied now. I don't know how this is going to last as we go into the fall season, but I think it'll just be better. I think it'll just get better because volatility will pick up more and it'll be a lot easier for us to really, make our strides with these entries here. But other than that, I think that's about it. So, all right, guys, if there's any questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow.